Now, new figures from the CSO has found that in the past 16 months, close to 11,000 properties have been bought by investors. The data also reveals that since January 2016, 1 in every 7 properties has been purchased by non-occupiers. So what does this mean for hard-pressed house buyers or want-to-be house buyers? Well, to find out more, we're joined on the line now by Dr. John McCartney, economist and director of research at Savills Ireland. John, thank you very much for joining us. We've been told by rental groups and groups representing landlords, I suppose more specifically for the last year or so, that changes in the rental market will lead to investors fleeing. But investors are not fleeing, are they?
Well, not in net terms. At any given moment in time, of course, there is an outflow of investors into any market, but equally there is also at any moment an inflow, and the critical thing is, what is the net movement in the stock of investors. Certainly some are leaving, but the critical thing is more are evidently coming in than are leaving. And in fact, if we look at the latest quarterly numbers from the quarterly National Household Survey, we can infer that the stock of privately rented properties has risen by about 1,300 units, 12 to 1,300 units in the last 12 months. So it's edging up slowly, and it's not contracting in net terms. That's not to say that some landlords are not in distress. Some of them clearly are, but the ones that are having problems are typically landlords that have bought properties with a mortgage, probably at the height of the market. They have a lot of debt on the property, and they're just finding it very difficult to be able to make money by letting their property while servicing that level of debt. And increasingly what we're seeing is that the banks are sort of in the background encouraging those investors to get out of the market. But equally, and you allude to the CSO figures in addition to your piece here, equally we know there's a big inflow of investors coming in, and that overwhelms the outflow. And the critical difference is that these investors coming in are cash buyers.
And just on that, the profile, I suppose, of the investors coming in. So cash buyers is one aspect. Do we know anything else about them? Are they, for example, a landlord with 1 or 2 properties, or are they the big landlords that, this is their business?
Yeah, I think it's a mixture of both. The CSO figures helpfully break down the total investor flow, if you like, into the sort of the corporates and the individuals. So in terms of the individuals, in the last 12 months, 8,513 small-scale investors have bought properties, or should I say 8,513 properties have been bought by small-scale private investors, and about 6,000 have been bought by the large institutional buyers, the corporates, if you like. So that's approximately how it breaks down. But both of them are very active in the market. Both of them can be classified as cash buyers, and the reason that they're buying is because the returns, given where rents currently are very attractive relative to other things that you could be doing with your money by sticking it in the bank, for example, or buying a bond. The return on residential property is very, very good from a financial point of view. So
what can be done about this, John, from the point of view of house buyers who want to buy maybe their first home or indeed their second home, but most particularly first-time house buyers who have a very limited budget? And we hear anecdotal stories from those people going to house viewings and say the price is 300,000. There's the man in the suit in the room who will always be able to go to 305. If they go to 310, they'll always be able to go the $5,000 higher. And outbid them. What can we do to protect the first-time house buyers or those people who can't afford to go up against big investors?
Yeah, it's a very frustrating experience, I've no doubt, just what you described there, and it must be absolutely soul-destroying for putative first-time buyers. Unfortunately, the solution, many of the proposed solutions to that problem just create another problem. In other words, if you were to do something to disincentivize the investor, you would be having a negative impact on the supply side of the private rented market. And we know that although it's very difficult for people to buy houses, it's becoming very difficult for people to rent affordable housing units as well. And so we don't want to discourage landlords. Landlords are not the enemy here. The real problem is that there isn't enough residential housing of any description to go round, and if you make it easier for people to buy at the expense of landlords, then unfortunately by definition you're making it more difficult for people who rent, and they're some of the most vulnerable people in society, and so unfortunately, and it's becoming boring for everybody, I know, at this stage, but the solution ultimately lies in building more housing units as rapidly as we can.
Just finally then, John, new Taoiseach due to be elected by the Dáil on Wednesday. If you could give him one piece of advice or one policy initiative that he could do to try and increase supply, what would it be?
Well, I'd suggest cutting the VAT on new homes. Currently VAT is levied on new homes at 13.5%. The arithmetic for housing supply is pretty basic. If you can build them and sell them for cheaper than the cost of development, then you make a profit and you'll do it as a developer. Now, there's only two ways we're going to get more building. One is to allow prices to increase relative to construction costs, and eventually we'll get more building because that creates a profit opportunity. Unfortunately, the byproduct of that is that the construction will happen at a higher price point. The only other alternative is to address costs of construction, to reduce them, and the government has very limited leverage here, and I think about the only thing that they can do directly in the short run is cut the VAT, and because that has a direct impact on the costs of building and delivering properties to the market.
All right, Dr. John McCartney, economist and director of research at Savills Ireland, thank you very much for joining us this afternoon.
Now, just ahead on News Talk Drive at 4:45, we're going to be talking about the amount of objectors to wind farms who cited